Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, the gold price has hit record high yet again in the previous trading session and remained in sight of peak on renewed concerns over US-China trade war. The US President Donald Trump hit pause on tariffs against Canada and Mexico, but the same favor was not extended towards China. The Chinese government imposed retaliatory tariffs against the US on some goods and export controls on certain metals. Inflationary concerns also have fueled demand for safe haven buying of the yellow metal. So what's in store for gold next? To discuss this, we are now joined by Sachin Jain. He's Regional CEO for India at World Gold Council. Sachin, hi, good to have you. And to the global cues first, because they really seem to be taking priority right now. We are looking at gold taking support, even as we've seen tariffs push back a bit. How are you reading onto the US tariff turbulence at this point?
First of all, Manisha, thanks for having me on your platform. It's always a pleasure. Well, the world of gold has been quite interesting. You know, coming out of 24, we think the year of gold, the year of 24 has been a year of gold. And it progresses in the same fashion. And all the elements that you just mentioned that have stood behind gold have been the fundamentals. Gold as a safe haven, gold as a liquid asset, gold as a hedge, gold as a diversified portfolio. So all elements have paid out. And if you look at the core pillars on which the gold sort of pans out, the central bank's mind, which is really the strength of the country and the strategic view of any nation, and that has been very interesting last year. That has grown significantly, and move fast forwarding to 2025 will continue as the world becomes slightly the way it is on trade tariffs and so on and so forth. Now, gold as a financial instrument has played up very well last year with almost a 30% plus return, and that has got a lot of interest from the financial markets on gold as a segment, and that will continue in 2025. Jewelry as overall consumption, we've seen globally has been a bit of dip, but India has done very well with, of course, an outstanding Q3 of August, like July, August, September, post the reduction of custom duty. But I think what's happened, particularly on Saturday with the new budget coming out, a budget that's so strong, a budget that sort of almost marches India to a Viksit Bharat 2047 with core pillars of simplicity, core pillars of investment in infrastructure, and other elements that have paid out. We believe that this is going to be a very strong, phase for gold, not just India, but overall. Now, you mentioned about things happening in America and everything. Again, go back. I always talk about this, the core pillars of gold, which is around hedge, around geopolitics that happens and how gold tends to be a stable asset class. So all those fundamentals of gold are panning out.
Sure. Sachin, coming back to budget, and as you mentioned onto that one, we also saw jewelry import duty cut from 25 to 20%. How is that going to impact Indian buying and overall market?
Well, I think the Indian market is quite sort of well segmented, and there is a lot of consumption that is led from a high-end luxury sort of consumer. And I think a reduction of gold import duty is a good thing. It'll only amplify consumers' interest who perhaps are buying overseas for certain brands will buy here. But I think it also, what's really done is that when we talk about the per capita income of an Indian on the street, a regular Indian, and how that's going to change with the changes in the income tax and other elements, we've seen as historically that every 1% increase in the sheer money in the hands of people, the sheer disposable income, it leads to about 1% increase in demand of gold. So we believe that as the Indians or Indians at mass will have more disposable income, it'll have an impact positively on the gold consumption. What you mentioned around the import duty on gold as jewelry, that's gone down a little, but I think it's only a positive. I think it only amplify the Indian creativity to be, there'll be a bit of competition, which is a good thing. And also I think it'll make us work better as Indian manufacturing and Indian creativity to almost, appeal to a global consumer as well.
Sachin, the other thing clearly was about India creating different tariff lines with more HSN codes. Now, we do understand that this would plug perhaps the revenue loss that the government was having, and it would make it easier to understand what kind of gold we are importing.
Well, actually, I think if you go back to the four sort of pillars of Viksit Bharat, one of them, of course, is infrastructure, the other is manufacturing, then it's about skill development. There's a lot of talk in the budget around skill development. But the fourth, I think, is what you're alluding towards, is simplicity. And simplicity with, of course, bigger steps. So when we saw the respectable finance minister give out the budget in July, it was a very big step for the gold business, where not just make it simple, but also, almost erasing the whole parallel gray market that used to exist. But I think now with all the different elements that you mentioned, operating in India as a business, an ethical business, will get more simpler. And I think it's only positive for the overall industry to operate more transparently. We've always had seen as gold industry, being a slightly opaque business. But if you look at how many industry players and people in the gold business have gone in the mainstream, to list their companies or stock markets and so on and so forth, it's only an amplified view that we can operate more transparently. And you rightly said that this one change has plugged this loophole that existed.
Clearly. Sachin, I understand, the previous conversations that we've had as well, you've said this many a times that 2024 was a phenomenal year, not just in sense of the gold price return, but also the number of IPOs that Indian market came out with from the jewelry sector and the kind of transparency that India continued to show there. 2025, what is your sense? Because you're just working with so many things with ministries on a global level as well. What are we looking forward to gold as a financial asset or a sector for 2025?
I think gold 2025 will be again a strong year because the core pillars on which gold is standing on, and I mentioned about the geopolitics, the hedge, all of the core fundamentals are strong. But I think the big steps that the Indian industry and the government took a few years ago, elements like mandatory hallmarking, which now we're seeing impacts on the floor, where consumers' trust in gold is high and will get better. We're also initiating, newer sort of projects like the SRO, the first one in the gold value chain, and a lot of such impetuses where transparency, confidence are the core structural changes that the industry is working on. Sure. And I'm super confident that a consumer on the street, whether it's a rural consumer or an urban consumer, their confidence on how gold gets to them is more contemporary, it's more transparent, it's more systematic. You can get on the app and see what's happening to your gold. And all of these things will amplify the consumption because the core element of what gold brings in is the trust, and that will get amplified.
Fair point. I do understand that World Gold Council, and Sachin, you don't talk about the gold prices, but I mean, look at the prices, all-time highs in the US dollar terms, in euro, in Chinese yuan, in the Indian rupee as well. Is direction on the higher side from here?
Well, I think from our perspective, we always say that look at gold from a long-term perspective, and the fundamentals of gold have always been, always stayed truth, particularly in 2024, where we've seen gold as a hedge, as I said, gold as a liquid asset, all those elements have stood forth, and they will continue to do so in 2025. Now, whether the market is going to go up crazily high or no, at World Gold Council, we don't indicate that. But we believe it's going to be a strong year. It's going to be stable to perhaps a slightly positive year as you go forward.
Sachin, as always, thank you so much for joining and a pleasure talking to you. So, well, there's various stuff that is happening in case of gold. Budget has been positive as well. More money coming to people would always mean buying more gold. And we have seen that happen all the time in India. But with that, it's time for a short break. But coming up, government pushes for self-reliance in pulses and improving production of Makhanas. We will decode the impact with experts on the other side. Welcome back. You're watching Commodity Champions, and let's shift focus to the buzz around Makhanas, also known as foxnuts. Finance Minister Nirmala Sitharaman announced the setting up of a Makhana board in Bihar to improve production and value addition of the superfood in the state. The initiative will have an initial budget outlay of 100 crore rupees and will focus on training farmers as well. Makhana has gained popularity in the recent times due to its high nutrition value. Its market in India is estimated to double to nearly 1,900 crore rupees by 2032. We are joined by Gunjan Jain, President of the Nuts and Dry Fruit Council in India, to discuss this further. Gunjan, hi, good to have you. We do understand that.
Thank you, Manisha.
We do understand that putting up a board is one thing, announcement of a board is one thing, but by the time it starts work, etc., is going to take some time here. Another interesting thing really is, Gunjan, that 90% of Makhanas comes in from Bihar, but the export happens from Punjab. Do you think a lot of these things perhaps could be plugged well?
Yeah, I think it's a great step. This budget has been a mixed bag for our industry. A lot of very nice announcements. Foxnuts or Makhana becoming a board being formed just tells that the board will take time, but all it just tells is that it is on the government's map now to try and it's on the map of the government for future improvements. Bihar, as everybody knows, is 90%, a little bit in Jharkhand, a little bit in West Bengal. And the great thing about this Makhana product is that today India is the 95% exporter of Makhana in the world. There are only two other origins. China, very little, and Pakistan, very little. The main producer of gorgon nuts or fox nuts or makhana is India. So a huge potential in exports, and not just exports, even the domestic market. Now that the fact that it is being treated as a superfood has led to such a huge surge in demand and prices, and it's leading to a lot more interest. I was talking to some growers, and we'll see a lot of production, more production taking place this year, not just out of Bihar, but also out of adjoining eastern Uttar Pradesh. You'll see a lot of production happening there too, because of the way the prices have seen. Start of this crop year, Makhana's, the average quality was priced at around 400 rupees a kilo. And right now, it's being traded, the same crop year, it's being traded at 1,000 rupees a kilo. So the prices have moved up by 600 rupees a kilo. It's a whopping 120%, 25% increase in prices. So because of that, the whole industry and demand is still there. So the great thing is that even at when prices moved that, we did not see any let out in demand.
Gunjan, I have to tell you, I was checking it on online maps, and Makhana there showed for a consumer, for a retail consumer like me, at around 2,000 rupees a kg. So clearly, it's a big cost that consumers are paying here. But also talk to me about what is the export price of this, because that I understand is much higher than that.
No, actually, you flavor the makhana. The reason that the export price looks higher is because it's a very voluminous product. So when the freight gets added, it's not done on a per kilo basis, it's done on a volume basis. One container, which would normally fit in, let's say, 20 tons of walnuts, would fit in just 4 tons of makhana. So because of that, the export prices, although looks much higher, but the realization is slightly higher only. But the potential, of course, is much bigger if we can do. And you rightly said, more is being exported out of Punjab because it's more a traded item than a trader, a factory owner in Bihar. I think this industry is at that cusp where we can make it into an industry. Today, I wouldn't say it's an industry, it's growers who are really working hard from cottage industry to make it a product. But I think there is now scope for large players, and large players are getting in. We, as the largest nuts and dried fruit brand in India, I used to sell makhana as a fulfillment product, and today I am selling 100 tons of makhana a month, and the demand is still bigger. I could do even more. Nataraj could sell 200 tons of makhanas. We can't because we're not getting enough product. But that's the kind of demand there is of the product.
Gunjan, so what is the production right now, and how has that grown? I mean, that also being aside, what is the kind of demand growth that we've seen in, let's say, last 5, 6 or 7 years?
So demand growth has been phenomenal, and that you can see from prices that even at such high prices, there's still shortage of the commodity. And this is not like it is shortage because of traders. This is shortage because of the end consumer wanting the product. So I think the total production, India varies between 80,000 tons to 120,000 tons, depending on year to year, how they do it. Last 3 years ago, the production had dipped because the prices weren't too great as a return to the farmer. But the last 3 years, every year is seeing a steady rise. India has a potential. I think this year, I'm expecting Indian crop to touch about 120 to 135,000 tons. That's the size that will become because of additional area coming under makhana farming. It's a very difficult product to make. It's not as simple as your normal wheat or rice. It's a very tough. The whole process is very tough. So I think the establishment of a board and the fact that there'll be some government attention, some subsidies will encourage more and more companies to invest in the makhana trade, and it will also lead to, I think, back end where the farmer is getting a better return. If we are able to train them, we are able to educate them. I think sky is the limit for this product right now.
Oh, well, yes, it is profitable, but as you said, it's labor intensive as well. But the demand growth seems to be really pushing up. And I'm really stuck on what you said, that the prices in this crop year itself have risen from 400 to 1,000 rupees a kg. So clearly a very strong interest coming in for this one. Gunjan, as always, thank you so much for coming by and making sense of what the budget means and, of course, what the market really is looking at. But shifting focus now, and we want to talk about pulses. In a bid to cut reliance on imports, the finance minister announced a 6-year program to boost the output of pulses in India. Measures include direct state agencies to buy the staple at guaranteed prices. Rising demand has forced India, the world's biggest producer and consumer of pulses, to spend a record $5 billion on importing pulses such as pigeon peas, black matte and red lentils in 2024. The budget has allocated 1,000 crore rupees towards the scheme, which aims to provide minimum support price, base procurement and post-harvest warehousing solutions in respect of the 3 pulses. But how challenging is the execution? To discuss this, we are now joined by Mr. Bimal Kothari. He's chairman of India Pulses and Grains Association. Mr. Kothari, hi. Again, a very good directive coming in from the government, but it really is about the execution, isn't it?
Hi, Manisha. Thank you for inviting me to the show. As we all know that this has been a good move in the budget by the government, that they are looking at the self-reliance to achieve the self-reliance in pulses. In fact, the finance minister spoke in her speech that we nearly achieved the self-reliance, but as you know, our demand is increasing and the pulses are basically grown in the rain-fed areas. So one bad season, we see that the pulses production, get very badly hit. From 16-17, when we had about 16-17 million tons of pulses, by 21-22, say next in another 6 years, we could achieve 27 million tons, which has been a record production. But from 27 million tons in last 2 years, we have seen that the production is on decline. From 22-23, it was 26 million tons, and in 23-24, it has been 24 million tons. So we have seen the production is declining. And the reason is the weather vagaries which the pulses has to bear, because as I mentioned, that the pulses are grown in the rain-fed areas. So the government's announcement on the pulses mission and allocation of 1,000 crore rupees is a welcome decision. But we need to see execution, whether this is enough to achieve the self-reliance, because that is the object of the government, to achieve the self-reliance. As I would like to mention, that India will require 40 million tons of pulses by 2030. So there is going to be huge demand, of the pulses, because pulses is staple food for us. We consume the pulses day in, day out. I mean, in every meal, we have the pulses, either breakfast, lunch, dinner, or snacks. We consume pulses in different forms. So pulses is very, very important food, and it is the major source of protein to our population also.
So, Mr. Kothari, we've seen the budget come out through now, and as you said, it's going to take some time, but we've seen a record import also happen in the year 2024. From here on, aside of the budget, even as we are looking at imports free for many of these pulses, what is it that the industry is looking for from the government?
Yeah, so I was in fact coming to that. So you see, it's just not that you just announced these steps. These are not enough. You need to do much more than beyond this to achieve the self-reliance, because the present policies are based on the minimum support price. We are government every year increase the minimum support price to encourage the farmers. But on the other hand, they are also allowing the cheaper imports. For example, you are aware, we have spoken several times on your channel that from December 2023 allowed the import of yellow peas at 0 duty. So whenever there is a issue with the government, they immediately take the knee-jerk decision. They take the harsh decision. This decision needs to be balanced. You see, when you are allowing the import of, say, for example, yellow peas, which the landing cost is 32-33 rupees, where is the minimum support price more than 56 to 80-85 rupees.
Sure.
So this is contradicting your own policy. This is a very allowing the cheaper import, it is definitely hurting the farmers. And this kind of message, the farmers get very wrong message, because the cheaper import, then they are not inclined to the grow pulses, more pulses.
Sure.
Despite of a robust monsoon last year, I don't think we have a significant increase wherever our demands are increasing. Though as finance minister announced that we reached the self-reliance. But what happened? Our demands are increasing. So demand, as I mentioned, it will be 40 million tons. So we need to have balanced policy. What we need to do, which we have advised the government several times, and we will keep on doing this, that the lending cost of the imports must be more than the minimum support price. So it doesn't hurt the farmers. And it will also take care of the interest of the consumers. And moreover, government is allocating 1,000 crore rupees. I say trade will give you 5,000 crore rupees annually if you if you have a dynamic duty structure. We don't need an allocation from your budget. We will give you 5,000 crore rupees. So you see, government needs to have a balanced policy so that we can move toward. I don't know whether we can achieve the self-reliance in next 5 years, but at least we can move towards the self-reliance, and we can decrease our imports, and we can have balanced pricing also, so that consumers are also not hit, the farmers' interests are also taken care, trade interest is also taken care, and the government's interest is also there. So I think we need to have a balanced policy, and then look into this, because Manisha, we are going to have a very serious issue if this issue is not taken up by the government seriously. There has to be a long-term policy. There has to be a long-term vision on this. These knee-jerk decisions are really hurting not only the trade and industry. Definitely, trade industry are badly hit in last 6 months, but it is hurting the farmers in long term, I am telling you. And if this goes on, I don't think India can achieve the self-reliance. So we need to really look at our policies, and we need to have a long-term vision. We need to ensure that by 2030, we are almost close to the self-reliance.
Absolutely. A very last quick question, Mr. Kothari, and this one is on the yields. We understand that India continues to suffer from that as well. Is enough being done on that front?
Yeah, I think more is required to be done on this. Of course, our research institutes are working on it. Government has also announced the steps to be taken to increase the yields, because our yields are very low. At the moment, we are growing the pulses in about 31 million hectares. I really don't think that how much area we can further cover. But even if we cover, it is important that we require to increase the yields, because if you really want to double the farmers' income, as our Honorable Prime Minister always imagined about it, always thought about it, which is a good thought, of course. And so then we need to increase our yields, because our yields at the moment are, if you look at even we compare with the world average, our yields are very low. So it is important that we need to work on the climate resilient seeds, because climate is becoming very erratic and very uncertain of last few years, what we have seen, and the way the global warming is happening. And also we need to look at the pest resilient seeds, and of course we have a lot of post-harvest losses. The budget has also allocated this 1,000 crore rupees to manage the post-harvest storage. So all these things we need to, bring a lot of infrastructure. The budget is also talking about the agri infrastructure. So that is also going to help, in the long term. So as I say, these are not the short-term policies. These are long-term policies, but needs to be implemented with more budget allocation. And as I mentioned, the trade is, if there is a dynamic duty structure, trade will only, fund this kind of projects. So I'm sure if the government will look into it, and through your channel, I'm telling you, the IPGA is ready to work with the government towards this.
Mr. Kothari, thank you so much for joining in. Well, I understand the sector has gone through a lot, and we're looking at cheaper imports coming into the country. So I take your point, as you said, that the imports should be at a landed cost above MSP, dynamic duty structure, and long-term consistent policies is something that the pulses industry is asking for from the government. But with that, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.